Too many business owners are flying blind when it comes to their finances, relying on guesswork and their guts instead of real numbers. And that can be the fastest way to run out of cash before you even see growth. This is why we always recommend building a budget for every business, regardless of how big or how small you are. Let's dive in. Hey everyone, I'm Jeff from Proseer, and we help business owners streamline their finances so they can focus on what matters: their clients, their product, and their teams. If you want proven strategies to finally take control over your business, including your budget and your cash flow, make sure you like and subscribe because we're dropping videos once a week to keep you informed. So why is it that most business owners avoid building a budget? The most common response we hear from our clients when we ask them this question is that they don't know where to start. And also, it can feel overwhelming. If you're an entrepreneur, you're already wearing a million hats, from managing sales and marketing to making sure you hit payroll to even ensuring that your team's computers are working. So adding another task or spreadsheet can feel impossible. Other founders may think that building a budget is just for big corporations, not a small firm with 2 to 5 owners or under 20 employees. And most people don't even know where to start. So they default to guessing or just looking at their bank account to determine if they're being successful or not. Now, we'll get into the tips on how to start in a minute, but I want you to understand that there can be a real cost to not having a budget. Not having a budget can be more expensive than the cost to build one. This shows up in a couple ways. First, you'll feel like you're running the business without a clear plan, always putting out fires, not having a strategy on where you're going that you're able to communicate with your team, investors, lenders, your clients, or anyone else. Without a clear plan, you could even run into cash crunches, which could potentially mean missing payroll, not paying vendors, or not being able to deliver the high quality products and services you promised to clients. Without a clear strategy or visibility on your numbers, such as a surprise tax bill, a late customer payment, or getting an invoice from a vendor late and you don't have the cash to pay it, can completely throw off your business. And worst of all, you can miss out on opportunities like expanding your products and services or investing in marketing and sales to increase your income because you don't know if you can afford it. So where do you start? Well, here are 3 initial steps to build your budget. First, define what your big goal is. Look over the next 12 months and set a target for where you want to be a year from now. Whether that's a set number of customers you want to have in your business or you want to hit a specific revenue target, write that North Star goal down. Once you have that, you need to analyze where you are today. Review your current deposits and inflows and your current revenue to understand how far you are from hitting your big goal in a year. If you don't have a robust accounting system, you can just write down the inflows of your business. Look at your bank account, see all the deposits, and put a note next to where those deposits came from. Then look at the notes you made and get an understanding of where the majority of your business is coming from. Are there trends that you didn't realize that you had previously? Use the information of knowing where your money is coming from now can be super important into building the plan on how to get to your North Star goal. So we know a little bit about where we are now, and we know where we want to go. Now we need to build out the plan on how to get there. Now, after we do this initial analysis, we need to decide what are the inputs needed to hit our North Star goal. Similar to step 1, we need to look at our bank balance or our accounting system to understand what expenses we have now and what are those additional expenses we're going to need to hit our goal. Break your expenses into categories. What are the direct costs that you need to invest in to hit those targets? If you're in services, you may need to hire more people. If you sell products, you need to determine if you need to buy more inventory and what the cadence of those purchases will be. Those are the direct costs to the sales. Next, we need to analyze what the operating or back office costs are needed to hit our goals. Next, we need to look at the operating expenses associated with running our business to keep our lights on, such as rent, insurance, other payroll, sales and marketing, all the costs that are not directly related to sales, but help you achieve your goals. Once you understand where you're at today with those operating expenses, you should think if you need to invest more in certain areas in order to hit your 12-month target. For example, do you need to hire a new salesperson? Or do you need more back office help in the form of additional accounting team or more software and subscriptions to help you scale without more headcount? Oftentimes, doing this analysis will lead you to the answer that you might be overstaffed or might be spending money in things that you didn't realize before. You can cut back in these unneeded areas and free up cash to spend in other areas of the business to hit your targets. Lastly, we need to look at our cash flow. Calculate what our monthly difference between inflows and outflows will be to see if we have a cash need or if we have surpluses in areas where we can reinvest. This is why I recommend doing a month-by-month forecast. Sure, we know where we want to be in 12 months, but if your business is seasonal, the cash need might change depending on what time of year you're in. By doing a monthly analysis, you'll see whether or not you need to take out a loan to fund the operations of the business during a slow part of year, or you can use excess cash to invest and maybe increase that North Star goal. This doesn't have to be a complicated analysis, but it should give you a picture of where you're underinvesting, where you're overinvesting, and what you need to do now to set yourself up for success in 12 months. So after you're done, you'll have your forecasted monthly revenues, you'll have your operating expenses, and you'll see where your profits are going to be. If you don't have profits, you need to analyze what you need to cut back. If your profits are too big, you should consider if you actually are being conservative enough in your operating expenses. The main goal of this is that you do not want to get caught with surprises. So now we're done and we're ready to operate. You can communicate this to your team in many ways. You can set that North Star target and get everyone excited. You can talk about the new investment you're going to bring. But the really important part is to get everyone aligned on the strategy to hold the team accountable and to hold yourself accountable. But once you're done, it's important to remember that this budget is a living, breathing document. Just because you're done doesn't mean you should put it away on a shelf. You should analyze it frequently as you get more information or more numbers. Work with your accounting or finance team to update it frequently. We recommend quarterly, if not monthly, depending on how much your business changes over the year. Think of your budget as your GPS. You update your route as your business changes. A smart budget isn't just about cutting costs. It gives you the confidence to invest wisely, take advantage of opportunities, and grow with a clear idea of where you're going. If you like this video, please be sure to like and subscribe and share it with another business owner who might benefit from the information. Also, feel free to drop a comment below with your biggest budgeting challenge and I'll be sure to answer it. Every week, we'll be sharing practical financial strategies tailored for small businesses who want to protect their profits and scale with confidence. Talk to you soon.